You know, as traders, we all know market storms are kind of inevitable, right? They're like rogue waves, They can just wipe out even the most carefully built portfolios. But what if you could, kind of see these storms coming? Well, that's exactly what we're going to be diving into today, this idea of the Vex Alpha strategy.
What I find intriguing about Vex Alpha is it's about being proactive. It's about spotting those downturns before they actually hit, so you can adjust and mitigate potential losses.
So it's almost like a financial early warning system, like that's letting you know, hey, there's some danger up ahead.
Exactly. And the key here is what we call volatility targeting. Think of market volatility as that telltale sign of a storm brewing. By really analyzing all these measures of volatility, Vex Alpha can see shifts in market sentiment, those little tremors that often come before a major downturn.
So instead of just riding the waves and hoping for the best, you're saying this strategy helps you see those swells coming and adjust your course.
Precisely. And how it does that is pretty fascinating. Vex Alpha uses a whole bunch of algorithms, right, to analyze market data, historical price movements, options activity.
How would Vex Alpha kind of respond in a situation like that?
Okay, let's take a specific example. Let's go back to October 2007. Everything seemed rosy, S&P 500 was hitting those all-time highs, but under the surface, there were cracks, right, starting to show in the housing market. And Vex Alpha, because it's so tuned into volatility, would have picked up on these early tremors. It would seen that instability increasing in those housing-related assets and signaled, hey, time to move away from those more aggressive positions.
And this was all before the major downturn really hit at the end of '07, early '08.
Right. Remember, the S&P 500 ultimately took a pretty big hit. It ended up with a negative 9.69% return for that period. But for those following Vex Alpha, well, the outcome is a whole different story.
Are you saying there's a way to potentially sidestep a market crash? I mean, what kind of returns are we talking about here?
So the Vex Alpha core strategy achieved a positive 3.99% return during that same time. So that's a pretty significant difference, especially considering the market was declining.
A positive return during a crash. That's what I call riding out the storm in style.
The Vex Alpha enhanced strategy aims to, capitalize on those volatility swings. And while it did see a slight loss during that period, about negative 5.90%, it still significantly outperformed the S&P 500.
You're saying Vex Alpha still helped to soften the blow during a pretty big downturn. But let's get into more of these real-world examples. I'm curious to see how this strategy performed in other, tough market situations. Now, let's fast forward a little bit to April 2010. We had a couple of unexpected events then, right? The Icelandic volcano and then the whole Greek debt crisis. Those weren't like your typical market storms, but they definitely caused a lot of uncertainty.
You're right, those events might seem a little unrelated to the financial markets at first glance, but they definitely injected a lot of volatility, and that's what Vex Alpha is built to detect and respond to. That eruption disrupted air travel, and that caused all sorts of economic ripples. And then the Greek debt crisis, that raised concerns about the whole Eurozone. It made people nervous.
Okay, so how did Vex Alpha interpret these signals? Did it see those as potential signs of a downturn?
Absolutely. And it signaled, hey, it's time to move towards those safer assets. Remember, it's not necessarily about predicting specific events. It's about seeing those bigger shifts in market sentiment and adjusting accordingly.
So even when the source of the volatility is something completely out of left field, like a volcano, Vex Alpha can still help you navigate that turbulence.
That's the beauty of it. It's not relying on intuition or guesswork. It's purely data and algorithms. It's constantly analyzing the market. And the results kind of speak for themselves. The S&P 500 ended up dropping quite significantly, negative 11.67% return for that period.
Wow, that's a pretty big drop. How did Vex Alpha do during all that?
The Vex Alpha core strategy actually managed to pull off a positive return, 13.53% to be exact. It spotted that shift in sentiment really early and positioned itself accordingly.
That's impressive. It not only dodged those losses, it actually gained during a period when the market was down over 11%. That's pretty incredible. What about the enhanced strategy?
Well, it didn't have quite as dramatic a result as the core strategy, but it still showed its ability to mitigate losses, finishing at 0.28%.
Okay, let's move on to July 2011. This was the time of the whole U.S. debt ceiling debate. Super politically charged, everybody was on edge.
Yeah, that was a tense time. All that uncertainty around the debt ceiling, it created a lot of anxiety in the markets. It's a perfect example of how those political events can quickly turn into market volatility.
It felt like we were watching some kind of political thriller play out, and the fate of the global economy was hanging in the balance. So how did Vex Alpha, play this one?
By July 25th, Vex Alpha had already signaled to move into safer assets. Again, remember, it's not about taking sides. It's about recognizing the potential impact those events could have on market volatility and, making the right moves.
So it was like you had a front row seat to the political drama, but you also had this insider tip on when to make a quick exit. So what were the returns like during that period?
The S&P 500 actually dipped 5.45% that August. But the Vex Alpha core strategy, it really soared, an impressive 29.15% return. And even the enhanced strategy did quite well, coming in at 10.82%.
Wow, those are some pretty remarkable numbers, especially considering the market was in a downturn. It really seems like Vex Alpha has this, I don't know, sixth sense for those turning points.
Well, it's not magic. It's about recognizing that volatility is a part of the market. It's not about trying to eliminate it. It's about understanding it and using it to your advantage. And I think the data really backs that up.
Okay, let's move on to February 2018. This was, the infamous Volpocalypse. Volatility just went through the roof, caught a lot of people off guard.
Oh, yeah. That was definitely a wake-up call for a lot of people. Those who'd gotten maybe a little too comfortable with market risk. That sudden spike in volatility just reminded everyone that things can change in an instant. Even seemingly calm markets can turn on a dime. It was like one of those rogue waves we were talking about earlier.
Yeah, it felt like the whole market got whiplash. So how did Vex Alpha respond to that? Did it see the warning signs?
Absolutely. By January 29th, Vex Alpha was already starting to signal, hey, let's move away from those aggressive positions. Those algorithms picked up on those early signs of rising volatility and made the adjustments, helped to shield from the worst of that February drop.
It's like it's got this, I don't know, radar for market danger.
Yeah.
So even in a situation where volatility kind of comes out of nowhere, Vex Alpha can still help you navigate through it.
That's exactly the point. It's designed to react to those shifts in the market and help you stay ahead of the curve.
So what kind of results did that lead to in February 2018? The market must have taken a hit.
It did. The S&P 500 ended up with a negative 3.69% return that February. But the Vex Alpha core strategy, it delivered a remarkable 28.62% return, showed its ability to not only avoid losses, but also to capitalize on those volatility swings.
28% return during a month when the market was down. That's amazing. What about the enhanced strategy?
It also performed well. It achieved a solid 7.10% return, showed its ability to manage risk effectively even in that really high volatility environment.
It seems like no matter what the market throws at it, Vex Alpha has a way of not only riding out the storm, but actually coming out on top.
Right. It's not about predicting the future. It's about having a system that can respond effectively no matter what the market throws at it. And the data definitely suggests Vex Alpha is up to the task.
Okay, let's move on to September 2018. This was, all those trade tensions were really starting to heat up, creating a lot of uncertainty and volatility. It wasn't a sudden shock like the Volpocalypse, but more of a slow burn that was starting to boil over.
Yeah, that period really highlights how important adaptability is when it comes to trading strategies. That market landscape was shifting, and if you had a rigid approach, you were going to be in trouble. But Vex Alpha, because it's focused on that volatility targeting, it was able to adapt to navigate those choppy waters.
So it's almost like it's got this chameleon-like ability to kind of blend in, to change its colors as the market environment changes.
That's a great analogy. Vex Alpha is not stuck in one mode. It's constantly analyzing the data, looking for those subtle changes in volatility. It's like it can sense the mood of the market.
So what were the results like during this period of all this trade tension? Did Vex Alpha manage to stay ahead of the curve?
Well, the S&P 500, it actually took a pretty big hit between September and December of 2018, ended up with a negative 13.31% return. But Vex Alpha, it continued to demonstrate its resilience.
Okay, I'm on the edge of my seat here. What kind of returns did it manage to pull off?
The Vex Alpha core strategy, it achieved a 7.99% return, and the enhanced strategy delivered a solid 3.16%. And those results, they really underscore its ability to handle even those prolonged periods of uncertainty and volatility.
Those are some pretty impressive numbers, especially when you consider that the market was down over 13%. It's like having this, I don't know, financial compass that just keeps you pointed in the right direction no matter how rough the seas get. All right, let's talk about March 2020, the pandemic plunge. This was a black swan event, something nobody could have predicted. How in the world did Vex Alpha handle this?
The COVID-19 pandemic, that was a true test for any trading strategy. The speed and the severity of that decline. It was unlike anything we'd seen in recent history. It was a global crisis, impacted every part of the economy.
Yeah, it felt like the whole world was just falling apart. So how did Vex Alpha respond? How did it handle that sudden and dramatic shift?
Well, you got to remember, Vex Alpha, at its core, is designed to respond to volatility, no matter where it comes from. So even though the pandemic was this completely unforeseen event, the strategy was still able to see that huge jump in market volatility and adjust.
So it's like having a financial parachute that just automatically deploys when the market goes into free fall.
Yeah, that's a great way to put it. Vex Alpha isn't trying to predict the unpredictable. It's about having that system in place that can react quickly and effectively when those events happen. And the results from March 2020, they really speak for themselves. The S&P 500, it dropped sharply, ended up with a negative 12.37% return for that month. But Vex Alpha, oh, its performance was nothing short of remarkable.
Okay, I'm really curious. Lay it on me. What were the numbers?
Vex Alpha Core Strategy, it delivered a staggering 103.88% return for March 2020.
Wait, 103% during a market crash. That's mind-blowing. What about the enhanced strategy?
The enhanced strategy also did exceptionally well, achieved a 39.54% return for the month. And those numbers really highlight the power of a volatility-driven approach, even in the face of something like a global crisis.
Those are some pretty incredible results. It really is like surfing a tsunami and coming out on top. So we've looked at these specific examples of market storms, and in each one, Vex Alpha not only minimized losses, but often generated some really impressive returns.
And the important thing to note here is these weren't cherry-picked. These were major events, the kind that impacted investors globally. And Vex Alpha just consistently proved it could handle the turbulence.
It's clear that Vex Alpha really shines in those periods of high volatility where those traditional buy and hold approaches, well, they leave you pretty exposed.
You know, buy and hold, it might work well when the market's steadily going up, but when things get choppy, it's a different story. It's like you're just at the mercy of the storm. But Vex Alpha, it's different. It actually embraces that volatility. It uses it as a signal to adjust, to protect.
So instead of just battening down the hatches and hoping for the best, you're saying Vex Alpha helps you adjust your sails and kind of ride out that storm.
Exactly. It's all about being reactive. It's about understanding that volatility is part of the market and having that strategy in place to handle it.
Okay, so let's talk about the overall performance numbers across those 7 periods. What are we looking at?
Well, the Vex Alpha Core strategy delivered a total return of 178.41%, and the enhanced strategy achieved a total return of 45.05%.
Those are some serious gains. For comparison, how did the S&P 500 do over those same periods?
The S&P 500 actually experienced a total loss of 64.16% across those 7 periods.
Wow, that's a massive difference. Really highlights the value of active management, especially when you're dealing with volatility. But to really understand these numbers, I think we need to talk about alpha. Can you explain what that is and how it relates to Vex Alpha?
Sure. Alpha, it's basically a measure of how much an investment outperforms its benchmark. So in this case, we're comparing Vex Alpha to the S&P 500. And the results are pretty compelling. The Vex Alpha Core strategy achieved an alpha of 242.57%. So that means it significantly outperformed the S&P 500.
So while the S&P 500 was in the red across those periods, Vex Alpha was generating positive returns. It was consistently beating the benchmark. That's the kind of edge that, well, any trader would love to have.
Exactly. It's not just about going after returns. It's about managing your risk and maximizing those risk-adjusted returns.
All right, we've covered a lot. We've talked about how Vex Alpha works, looked at its track record, and talked about the importance of active management in a market where volatility is kind of the name of the game. But before we wrap up, I'd love to get your perspective on the bigger picture. What does all of this mean for trading going forward?
You know, I think Vex Alpha represents a real shift in how we approach risk management. It challenges that traditional buy and hold mentality, and instead it says, hey, volatility is an opportunity, not just a threat. It's about giving traders the tools to take control of their portfolios, to navigate those market storms with confidence.
So instead of being, at the mercy of the market, you're taking the helm and steering your own ship.
Exactly. And I think that's really powerful.
Well, this has been a fascinating look at Vex Alpha. Is there anything else you want to add about its potential to, change the way we trade?
I think the key takeaway here is this. We can't control the market, but we can control how we react to it. Vex Alpha gives you a way to do that. It lets you navigate those storms and come out stronger on the other side.
That's a great message. Risk happens fast. Think different.